All right, so I've talked before, obviously, a lot about MicroStrategy, or now strategy, but now I've talked about MSTY as well before, but there is now actually two new competitors for MSTY. So I wanted to get into that. First things first, if you get value out of the video, please like, subscribe, and comment. I very much appreciate that. So MSTY is from YieldMax. This is a covered call ETF. YieldMax has these on a ton of different companies, basically all of the big companies. They came out with the MicroStrategy one about a year ago, almost exactly now, and it's done extremely well. The share price, I believe, is only up very slightly, even though MicroStrategy is up very significantly. But when you account for dividends, it's up like very, very, very significantly. It's easily beat the S&P. So it has me intrigued, and it has a lot of other people intrigued, because it's paying. if you go based on the last month's payment, it's paying about a 75% dividend, give or take. Obviously, as a Canadian, we're going to get taxed on that. The Americans aren't. It does have a 95 basis point expense ratio, so that's quite expensive, but this is an actively managed ETF, so you would expect a higher expense ratio, but 95 basis points is kind of expensive. So actually, according to this, it's 99, but I thought it was 95. Whatever. This one is, again, easily the biggest one. It has almost $3 billion in assets. So that's something to point out as well. According to this, it's up 48%, but if you account for dividends, it's up, it looks like 183, which sounds about right. So this is why these funds are so popular, is because they're paying these extraordinarily high dividends. Now, normally, when you see something like this, the average person, the first thing they're going to hear is, it's too good to be true. And honestly, that's really the only thing that makes me skeptical of these. I do have a very large position in this, so obviously I'm not that skeptical. But the thing I would point out is, well, the share price of MicroStrategy is mostly tied to the price of Bitcoin, and I'm very much bullish on Bitcoin. So that makes me very interested in these, for lack of a better way of putting it. So that's why I'm interested. And the other thing too is that MicroStrategy is very volatile, which is one of the main reasons why you get such a high payout, because options are priced based on expected volatility. MicroStrategy is one of the most volatile stocks out there, and normally stocks that are this volatile, usually they're actually not the greatest of investments. But this is different, in my opinion, because I think that the price of Bitcoin over time is going to keep going up, and thus the price of MicroStrategy is going to keep going up. And along the way, it's going to be very volatile. So these, I think, these covered call ETFs have gotten very, very popular over the last 5 years or so. And I think that this is the perfect one. Like, this is really the perfect one. Now, the one caveat I would throw out there is, obviously it comes with a lot of risk, but what comes when you look at this, a lot of times people assume volatility and risk are interchangeable, and to some degree they are, but to some degree they're not. I'm very bullish here for one simple reason. I think Bitcoin's going to keep going up, and because of that, MicroStrategy is going to keep going up, and because of that, a fund like this is going to do very well. Now, the one pushback you hear a lot to these ETFs, another popular one, is, well, MicroStrategy share, like just buying the shares and holding, have outperformed MSTY. And that is true, but in my opinion, like, my goal as an investor, like there's other goals, there's secondary goals, but my main goal is freedom. Like, I want to be able to not work, not necessarily quit my job, maybe, you never know, but I want to be able to not work, at least a traditional job, as soon as humanly possible. Like, that's my goal. Now, that doesn't mean you want to be stupid with your investments, but my goal is to do that as soon as humanly possible. To do that, you either need a very high net worth in the millions of dollars, or you need to be bringing in at least what you're making from your job in income from passive sources, or at the very least semi-passive sources, because some people define income from investing or real estate as not passive. I would say income from stocks is passive, even though it does take some work to do. Income from real estate, probably not, but that's a different story. But like I said, my main goal is freedom. Like that's the main goal. The main goal is not to get the greatest returns, but that's not the goal. The main goal is freedom. And with these, I think that's a big step towards that, because getting $5,000, $6,000, $7,000 a month from these funds, that's like $100,000. Like that's really not that much. Like coming up with $100,000, again, coming up with $1 million, that's quite hard. But coming up with $100,000, it's not that hard. Now, to be fair, I am not dumb enough to go all in, even though you could make the argument that you should go all in. I do have investments in other stuff. I kind of have two portfolios, and the philosophy in them is actually quite different. The first one is more of a long-term one that I want to grow, the traditional like Warren Buffett style of investing. The other one is purely an income play. That is the one that's the one that pretty much all my money goes into, because I have enough in the other one that if I simply just maintain what I'm doing, it's going to be over $1 million in 30 or 40 years, which is pretty much all you're worried about. But the other one is the one that I have most of my MSTY, and these are the ones that they're all either high dividend stocks or high dividend growth stocks, mostly high dividend stocks, or frankly ETFs. And that's where I hold most of my MSTY, and that is the largest position in there, and it'll probably stay the largest position in there. My goal in there is to get to the point to where you can get that, $5,000, $6,000, $7,000, whatever you need a month. Get to that point and then diversify, because as bullish as I am on MicroStrategy and these, at the end of the day, like I said, my main goal is freedom. And obviously there is a chance that MicroStrategy goes belly up, or we see a massive recession that'll make it go down 90%. And I don't plan on selling, but at the very least you're gonna be down a lot, and it's gonna take a while to recover from that. So that is kind of the long and short of it. So getting right into it here, I mentioned at the start of the video that there's new competitors to this. The first one is actually Canadian. This is also MSTY, but this just trades on the TSX. Maybe it trades over the counter in the States. I'm not actually sure, but it does trade on the TSX. Now, this one intrigues me for many reasons. Number one, it's Canadian, so I don't have to worry about paying the extra taxes and paying the extra fees to sell, because at least on Wealthsimple, which is the platform I use for one of the platforms I use, they have trading stocks that trade or ETFs that trade on the TSX. They have no fees. U.S. stocks, they have a flat 1.5%. Even though obviously that's not that much, it's still a decent amount if you're selling a lot or if you're buying a lot. The other good thing about this one is the management fee is only 40 basis points, which is less than half of the Yield Max one. So that's something I very much like. The other thing here too is the potential drawbacks. Number one, they've only paid 2 dividends. They've only actually paid 2 dividends for 2 months. They'll be paying another one in about 10 days or so at the end of the month. They've both been 40 cents. If you look at the Yield Max one, the dividend has been as high as $4.42 a share and as low as $1.33. So the dividend for this one is all over the place, right? It's all over the place. But for this one, it's been 40 cents both months. Now, that's something that I'm definitely going to keep an eye on, because if this dividend, if it goes higher, great. But if it starts to go lower, that's going to make me less intrigued, because based on the current share price, the dividend for this one's about 45%, which is extremely good, obviously. But the dividend for the other MSTY, the Yield Max one, after adjusting for taxes and whatnot, it's about 65% Canadian. So the Yield Max one is still better. Obviously, the expense ratio is a little higher, so that takes away from it a little bit. But the yield max one still is better. But you have to keep in mind that this one hasn't been around for nearly as long. So I definitely am starting to buy this one, but I'm not buying it as much because it just doesn't have as good of a history. If we get 6 months to a year of this one and it's performing just as good as the yield max one, I will start to flip and I will start to buy more of this one because it just makes sense. Like, it just makes sense. It has lower expense ratio and it's Canadian. Obviously, if you're American, this is completely different. I'm just trying to make a point here. Now, I mentioned there was a couple competitors. There's also IMST, which is the Bitwise one. The problem with this one is even newer than the Harvest one that's trading on the TSX. This one just started trading. It hasn't even paid a dividend yet. The first dividend is expected to be paid at the end of May. So this one's still just over a month away from even paying a dividend. It looks like it has kind of a weird schedule for dividends, but nonetheless, it looks like it's going to be paying later in the month or earlier in the months, which is kind of weird. Usually they're closer, but nonetheless, this is another one that I'll be watching closely. This one has a high expense ratio as well. This one's around 98 basis points, I think. So 99 or 98, 99. So this one's exactly the same as the yield max one. So this is, again, another one to keep an eye on. And I really, really like this. Number one, because it's bullish for MicroStrategy, and not only that, it provides a lot more liquidity in the options market, which is going to help out. But it's also really good in that it's going to provide competition. And that's really good because not only, I think all of them will be good if I'm just guessing, but I really like the competition because that allows you to buy the one that performs the best. Competition is always good. So I really, really like that. This is going to be a really good thing to watch out for. My long and short of it is I'm still the most bullish on MSTY, the yield max one, but that's entirely because the history on this one, the Canadian one, is still very small, and the Bitwise one is basically non-existent. The last thing I'll leave it on here is Harvest has another one. It's MSTE. That one, they're actually using a little bit of leverage. So that one's very, very new as well. That one is very, very new as well. I believe it's only paid about one dividend. Let's see here. It's not even the TSX one here. So MSTY.TO, it's paid one dividend. So this one's still way too new. It's actually only been around for like just over a month. The one thing about this one is that if you actually go based on this one dividend, the dividend's about 48%. So it's almost exactly the same as the other one. But again, they are using a little bit of leverage. So this is one that I'm definitely not buying right now because I want to see how it performs, because whenever you got to be really, really careful with leverage. This is one of the gospels of investing, is be really careful with leverage. So this is one I'm definitely not going to be buying until I see how it performs in a clear downturn or a clear uptrend. I want to see just how much is it going to outperform, because if it's just a little bit, it's not worth the extra risk. So this is another one to keep in mind as well. But anyway, I want to leave it there. If you liked the video, like I said, please like, subscribe, comment, check out those links below, and stay tuned for more.